Let's look at the currency, whereby we saw the shilling held its ground against the dollar yesterday on Tuesday to close at 83.75.95, barely changed from the previous day. The shilling is, however, expected to farm on proceeds from the tea auction held on Tuesday. On the Nairobi Securities Exchange, we saw the main share index extend losses for the third straight day in a row, shedding 0.44% to close the session at 4,844.81 points. The index was dragged down by Kenya Commercial Bank, which is trading at an ex-dividend rate. Joining us today, we have Timothy Abwoga. He's a research analyst with Jangis Capital. Many thanks for joining us.
Thanks for having me.
Fuel prices came in lower across the board, falling by about 5 shillings. And of course, that has a very heavy weighting on inflation. And now we are seeing a lot of macroeconomic stability, with the central bank also reducing the central bank rate. Looking at that, how is that likely to augur aboard with the stocks that are listed on in the stock market? Sorry.
First of all, I think the stocks that will be heavily affected by this will be stocks in the manufacturing sector. We're likely to see stocks such as EABL, BOC, Cabacid, enjoy at least lower cost of goods in terms of the transportation costs, and as well as the energy costs. Also, this also affects KPLC, seeing that as they had the rejection by the Vice President on their power tariffs. I think this will also come as a reprieve to Kenyans as a whole, as KPLC relies on fuel-powered engines to feed power into the grid. So we also expect this should have a slight impact in terms of the household purchasing power. We're likely to see households also have slightly higher purchasing power with lesser cost of electricity, lesser cost of goods, lower transportation costs. So generally, the consumer should be having a good month.
Okay, so looking at it, we're also likely to see inflation coming down this month.
Yes, we should expect inflation to come down, given that that the price of fuel has gone down, but also increased spending by the public might also might maybe keep it stable or slightly higher inflation at the end of the month.
All right. Looking at Safaricom, which I'm sure is some of the other counters that will also benefit from this, we saw the company report record earnings yesterday, and of course record dividends, a 41% increase on the dividend to about 0.31 shillings. What impact do you see that having on the stock market? Yesterday we saw it rallying to about 4.3%, to about 7 shillings and 20 cents. Today, how do you see the stock performing?
I think the stock is going to perform very well today, going on the back of yesterday's results. I think we're likely to see more investors getting into the stock, especially before books closure. So I think with the impressive performance that they posted yesterday, I think investors will be very bullish on the stock, trying to get in before the stock experiences higher prices. Again, a stable macroeconomic environment gives the company fundamentals a very good business environment by cheaper cost of goods and increasing consumer spending. So in this business segment, specifically data and fixed revenue data services, we're likely to see those business segments improve going further into the year. So I think it's definitely a stock to watch going into the second half of the year.
So we're likely to see it continue rallying?
Yes, but on the other hand, we might also, as it approaches its valuation level, its fair value, maybe we might see some investors exiting in terms of profit taking, but that shouldn't dampen the stock too much. I think it's still going to maintain its current trend going further into the year on the back of its impressive performance this year.
You've mentioned something that I'd like to follow up on. You talked about its fair value.
Yes. According
to your analysis, what is the fair value of Safaricom at the moment?
According to, I think it's about 6.9. Because at 6.9, stock is trading at 7.2. We're likely to see investors exit. We're likely to see others come in, maybe on anticipating better future results, which again might buoy their stock to play around the 6.8 region to around 7.5 region going forward into the year.
All right. Kenya Commercial Bank, which is now trading at an ex-dividend, was one of the stocks that was punished yesterday, losing about 5%. and it had actually lost 8.8, but it paid back some of those losses. Is it something that is likely to continue, or this is just a knee-jerk reaction?
I think it's just normal market volatility whereby investors are doing profit taking. Especially yesterday, we saw the foreign investor dashboard. There was heavy selling on that counter. So it's basically just a few investors taking their profit. But going forward into the year, we do expect the stock to pick up again still on the same basis of a stable macroeconomic environment. Interest rates are coming down. So we expect the bank to continue growing its loan book, and we expect better performance at the end of the year.
And of course, we've seen some of the other banks taking a cue from the central bank, reducing the rate by about 2 basis points to half a basis point, depending on different banks. But KCB has yet to catch up on this. Is it something that we're likely to see banks lagging, or are they likely to actually hasten up?
With more rate cuts, as of yesterday, or rather Monday, we saw the interbank lending rate has again been reduced to about 7.3%. So this should boost liquidity, and it is a cue to banks to lower the interest rates so that we can spur economic activity, especially in the private sector. So going forward, I think the banks will definitely reduce their rates, but it may not be as much as we expect. So maybe expecting maybe 200 basis points cuts to maybe 300 or 400 basis points cuts.